Stocks climb after Donald Trump puts off tariffs on EU till July 9th. Auto and IT, as well as utilities, are the big gainers. Financials, realty and consumer discretionary, however, lagged.
JSW Steel tells CNBC-TV18 it is pursuing legal options on Bhushan Power and Steel and expects to be eligible to rebid or get a refund in case the company goes into liquidation. The steel maker remains upbeat on prospects for FY26.
MSCI and FTSE indices announced weight reductions for Eternal following the company lowering its foreign ownership limit to 49.5% from 100%. The stock slips on anticipated outflows of over $800 million.
Divi's Labs perks up on inking a long-term manufacturing and supply agreement with the global pharma company. The arrangement will entail a capex of around 650 to 750 crores.
Rain lashes Mumbai as monsoon arrives early in Maharashtra. In the past 35 years, it's the earliest it has arrived. This after its onset in Kerala on May 24th is its earliest since 2009.
Hello and welcome to Halftime Report, live from the CNBC-TV18 Motilal Oswal studio. I'm Ekta Batra, with me is Mangalam Balu. Well, it's turning out to be a session where it is definitely raining green on the screen at this point in time. So we have the EU tariff deadline extension, which has really aided sentiment across markets globally, and that's filtered in or rained down, onto our markets. But nonetheless, stocks in focus. There's a lot to watch out for today. We have JSW Steel, Balkrishna Industries, Glenmark Pharma. All of these stocks in focus on the back of their numbers. And in terms of other stocks in focus on the back of news, just watch out for Divi's Labs, Eternal, Shilpa Medicare, all of these stocks which are buzzing around. And we'll get you all of those updates in the next 60-odd minutes. Hi, Mangalam.
Hi, Ekta. Good afternoon. Quite a precipitous use of rain-related, references out there. But tell you what, today's gain could be on a lot of domestic flows because the US markets are shut on account of Memorial Day tonight. So I will be watching out for volumes very closely, the FI volumes in particular. And typically when that happens, when domestic flows are supreme, you have the mid-caps doing well. And that's exactly what's playing out today as well. A lot of these stocks are spiking as we speak. So nearly 1,700 stocks which are in the green for about 800 stocks which are in the red as well. So we have a bunch of broader market names which are spiking, and most notably some of them from the cash market space as well. So if you look at a couple of these stocks which are notching gains, Cosmo First, for instance, has moved to the high point of trade, up 10%, locked in upper circuit all through today's trading session. We've had Inox Wind pull up some gains as well. Emcure Pharma is the other one, which is up around 9% after gaining post its numbers. All Cargo Gati has recovered from the lows, currently at the high point of trade. But a bunch of result reactions is what we're watching.
Yes, absolutely. It's been very active from the entire hospital space. We have a lot of stocks which came out from the entire hospital healthcare space. So, for example, Narayana also buzzing on the back of their numbers. But we do have Healthcare Global, which we're going to be talking to. They came out with their numbers. It is the first management on the show. The stock is under pressure after reporting what was a tepid set of Q4 numbers. Average revenue per occupied bed was up 3.5%, but the inpatient bed occupancy dipped. To discuss this and more, we have B.S. Ajay Kumar, who's the Executive Chairman of Healthcare Global, joining in. Dr. Ajay Kumar, thank you very much for taking the time out. Well, just wanted to start by talking about the ARPOBs, or the average revenue per occupied bed. That's up 3.5%, but occupancies of beds dipped by around 200 basis points in Q4. Is that because the average length of stay is reducing, your outpatient, medical solutions are increasing? Can you give us a reason for this?
Definitely, going forward in oncology, the AOL, the average occupancy is going to come down. And we have XCG, we are very proud that average length of stay comes down and most of it becomes outpatient. So we usually go by footfall and the growth. And we expect going forward, but as we add new beds, obviously, in different areas, our breadth strength is going to increase, but occupancy may be stable or minimally increase as we go forward, because majority of the therapy will happen as an outpatient, which is actually good for the patients. And I think in the long run, it is also brings more efficiency within the system.
Right. That's incredible. Outpatient therapies and the length of stay reducing, particularly in cases like oncology. From a patient standpoint, that's incredible. Let's wonder how that plays out for you in terms of the financials as well. You're saying that occupancy remains the same or at best declines a couple of percentage points. How much are chemo and LINAC utilization as a proportion of your sales? How much are outpatient as a proportion of your sales? And if occupancies are likely to reduce, then I suppose outpatient revenue will increase, right? So what's the contribution right now? How much does it go to?
Yeah, the outpatient contribution is significant. It may be in the range of about 65-70%. And when you look at even chemotherapy, most of it is done a day chemotherapy. Radiation, of course, is all day therapy. It is only the surgery and people who get into hospital for any complications. And HCG, we are very proud, we don't have that many complications. And that is part of the reason, when you look at our data,
Okay, I think there's something gone wrong with the line. Maybe we can just reconnect with Dr. Ajay Kumar. Dr.
I think
Ajay
he's
Kumar,
speaking. Yeah, go ahead.
if you could just continue.
Yeah, can you hear me now?
Yes. Go ahead.
What I wanted to say was, particularly in oncology, it's very important to focus on more outpatient, day chemotherapy, even day surgery. For example, even our robotic surgery, 3 to 4 days patients go home. And that is our objective in quality of care when you bring about outcomes are measured. So this is what we are very proud of. But going forward, of course, we are going to increase the bed strength. We are going to add nearly 900 beds coming year because of the new centers and new expansion. But at the same time, our occupancy percentage will not significantly increase.
Okay. All right. Give us a sense in terms of how your specific regions performed. Borivali, South Mumbai. You've set up, operations there. Tell us about what the occupancies, the RPOP growth and the overall performance was in these two centers specifically.
Particularly Borivali and South Mumbai have done extraordinarily well in this year, particularly the quarter also. In fact, South Mumbai, where we had some issues, has grown significantly over 40%. And Borivali also is obviously it is profitable and the EBITDA margin has improved to over 20%. So these are some of the positive things, but we see a tremendous growth opportunity in Mumbai for us as we move forward. We have taken a lot of measures. And when you look at the time we came into Mumbai and now, we are in a very strong position to take a leadership role in the private sector in Mumbai. And that is how we are even creating hub and spoke model. We are creating outpatient infusion centers. So we have a lot of plans for the Mumbai region to grow because that is a growth opportunity for us. And our RPOP in Mumbai is over 70,000.
So on an overall basis, what is the kind of RPOP and margin along with revenue guidance that you can give us for this year? Because you've said occupancies will remain stable, maybe decline by a couple of percentage points. So what does this do to your overall performance?
It may not decline, but may not grow significantly.
Yes.
But our RPOP is a growth of 3.5-4%. We are at about 45,000 and it will continue to grow. As you can see on the curve, it continues to grow. But the good thing is in urban areas, our RPOP has improved significantly. For example, in Ahmedabad, Bangalore, we have an RPOP of almost reaching 1 lakh. I think these will continue to grow with a good, healthy margin of the established centers have a healthy margin over 25%. And I think even the new centers, so-called emerging centers, will catch up there. And we expect our margin to be in the low 20s this year. At least 20% we hope we will touch.
Okay, you hope to touch 20% margins this year on a blended basis.
Yes.
Okay. The reason I'm asking you about your Mumbai market performance is because the competition is increasing quite a lot in the Mumbai space. For example, we do have hospitals coming up in Thane. Adani Healthcare has launched. They're looking to launch a hospital, Kandivali. In that context, competition, the number of beds is increasing. How are you probably creating a roadmap to combat the competition? How do you view it?
See, our model of HCG, when we started as a focused factory, very specialty oriented, one thing was very clear. We are looked upon as a destination. When you look at oncology care outcomes, as an oncologist, I can say that outcomes are the best when you go to dedicated oncology centers. So because of that, our referral pattern, our footfall continue to increase in spite of multi-speciality hospitals starting, oncology centers. So we are very confident that our growth strategy is there. If you look at, for example, Borivali, we have a significant growth upside as we move forward in enormous population base and the type of cancer we see as a destination. Because most of our cancer patients who come for our tumor board, second opinion, growth is all big. Majority of them also are recurrences and significant new patients are coming. And when we put out our outcomes, obviously that will also bring in patients. So we feel awareness of cancer is going to increase. And with that and the number of cancer patients significantly increasing in the urban areas, I think our growth strategy is very much in place.
Okay. Well, you do have KKR, which has taken over. Any kind of synergy integration that you can talk about, CVC's remaining capital, anything in terms of remaining stake, rather, anything in terms of monetization?
No, I am staying with my percentage. I am not changing that. As far as KKR is, as we have announced, the transition is happening. Hopefully, in the next few weeks, the whole place will happen. And of course, we will make necessary announcement when everything falls in place.
And you are staying at the helm as well, right? Irrespective of what KKR does.
Yes, the chairman. Yes.
Perfect. 10.4% is what you hold. You will continue to hold on to that. KKR comes in sometime next week. You will give us an update on that. And let's hope there is no immediate supply event with CVC holding about that 9% stake as well. Is there one?
Yes, CVC will continue with the stake, but again, we have to see how the open offer goes and all that. If any changes will happen at that.
Take that point. Thank you so much, sir, for joining in and giving us the business outlook for this year. 3.5% RPOP growth with blended margins turning 20% is what your guidance for this year is, with occupancies remaining stable at the 58% mark itself as contribution from outpatients increases. With that, let's move on and tell you what we're excited about. We're excited to unveil our brand new global business news channel. CNBC-TV18 presents an all-new CNBC-TV18 Prime. It brings you the insights from policymakers, business leaders and economists shaping both the world and India's future. CNBC-TV18 Prime decodes global shifts and their impact on Indian businesses, giving you an unparalleled insight. Tune in to CNBC-TV18 Prime at 12 noon today for the Global Reset and Global Lens at 8:30 p.m.
Welcome back. Well, for the markets, it's steady. So we have the Nifty, which is up around 0.5%. The Bank Nifty, which is trading with a gain of around 0.2% at this point in time. And the advance decline ratio holding quite steady. Around 2,400 stocks advancing to around 1,640 stocks declining. Just watch out for MQ Pharma because that stock has now gained around 36% this month. Done very well in the past couple of trading sessions. Is up 8% on good volumes today. And giving it company is Dishman. That stock is up around 38% month to date as well. So just watch out for a couple of these counters. But let's get talking on one particular company now. Parent company of Zomato, Eternal, is trading under pressure. Vivek is here to tell us why.
Well, that's right. So Eternal, the shares of Eternal, like you mentioned earlier, known as Zomato. Now, what's actually transpired over here is that on Friday evening, in an ad hoc decision, both MSCI as well as FTSE announced that they would be reducing the weightage of that particular stock in the respective indices. Now, what is the reason for this particular weight reduction? Remember, earlier last week, the shareholders of the board of Eternal voted in favor of going ahead and reducing the foreign ownership limit of Eternal, and they capped it at 49.5%. This ensured that the foreign headroom available for FIs and FPIs to invest reduces significantly. So in line with that, both of the index providers, MSCI as well as FTSE, have gone ahead and reduced their weightage. So what will be the likely outflow? IIFL Capital estimates that on account of the reduction of the weightage in the FTSE indices, Eternal could see outflows of close to $380 million, and this will happen in the trading session of May 27th. The MSCI weight reduction, which is scheduled on May 30th, could lead to outflows of close to $460 million. On account of this overhang of selling, you're seeing the shares of Eternal underperforming otherwise an essentially strong market today.
Take that point entirely, Vivek. Thanks a lot for that. To putting the number, earlier brokerages had estimated about $1 billion worth sales coming in, and that exactly has happened. This was supposed to be a supply event, and that has now come by. Let's see whether, from lower levels we see some purchase here post the event or not. The other concern is that of rising competition and rising losses in the quick commerce space. Ekta, back to you. Shilpa Medicare, it's tied up with a Finnish company called Orion Corp. Tell us a little more about this.
Well, yes. Besides that, it's also coming out with its numbers today. So that's the reason why you're seeing so much interest in the counter. But they did announce on Friday during market hours that the company is tied up with a Finnish company, Orion Corp. This agreement is to basically commercialize recombinant human albumin in Europe. So Orion has an exclusive right to distribute, market and sell Shilpa's particular recombinant human albumin in Europe. So basically, whatever Shilpa manufactures, Orion has an exclusive right to distribute it. Now, this particular thing, which is recombinant human albumin, is a key plasma protein and is used in various therapeutic applications and as a critical component in vaccine and biologics. So there's a potential that, the street is quite bullish on this particular tie-up, but separately, the company is reporting its numbers today. So that's the reason why the stock is also up around 12%. So there's a lot of, the street is watching out on what they could probably report today. But the other one is Balkrishna Industries, which is under pressure. It's in focus on the back of its Q4 numbers. And we have Vamakshi here to give us the details.
Well, Ekta, when you look at the numbers that have come through from the company, the total revenue saw an uptick of 5.2%, out of which the revenue from operations saw an uptick of almost 3%. The rest of the growth actually came in from the realized gain on Forex. This came in at 91 crores this time around as compared to 24 crores in the same quarter previous year. As far as volume and realizations are concerned, the volumes were rather flat at 82,100 odd tons. The realizations actually drove the entire improvement that we saw in the total revenue. The realization saw an uptick of almost 5.3%. The operational performance, though, was quite tepid. The margins have contracted by 115 basis points to 24.8%. The EBITDA is rather flat at 703 crores, and the net profit actually saw a very sharp fall of almost 25%. And this is because there was an unrealized forex loss of almost 58 crores in the fourth quarter. Now, in the conference call, the management also refrained from giving any growth guidance for its core global off-highway tire segment. They say that they continue to face demand headwinds in their key global markets, but going beyond that, the company has also given a 5-year roadmap, and they are expecting to scale up their revenue by over 2 times, 23,000 crores by 2030. They will be investing nearly 3,500 crores in capex over the next 3 years. This is in addition to the 500 to 700 crore capex that they had already announced. Now, Investec believes that this accelerated capex is likely to constrain the company's free cash flow. Apart from that, they've also announced foray into TBR as well as the premium PCR segments, which will contribute nearly 20% to the company's revenue by 2030. But again, out here, Nomura believes that this is an entry into a very competitive space, and therefore the midterm ROEs could, come under pressure on account of that. Let's also look at what some brokerages are saying. So Morgan Stanley has an underweight call. They've cut their target price to 2,070. Investec too has downgraded the counter to sell, cut their target price to 1,910 per share, and Nomura also has downgraded it to neutral, target price of 2,644 per share. So overall, doesn't look like a good set for Balkrishna Industries.
All right, take that point, Vamakshi. Thanks a lot for that. Let's take a short break. On the other side, we have Sneha Seth of Angel One joining in on some trading strategies as the Nifty meanders around 25,000. Welcome back. Look at Kalyan Jewellers. That stock's moving higher, so we have a bunch of these mid-caps doing well. And keep an eye out on Vodafone Idea as well. It's been beaten out of shape, down almost 50% in the last 1 year. Adverse rulings against the company as well, and now has smidged higher and currently is sitting with the gain. For most part in the day, it was mildly in the red, and now currently has inched back into the green. So we'll keep an eye out on all of this as we watch out for the markets. Key indices in focus today. We have Nifty, Nifty Bank as well as the mid-cap index. The Nifty Bank facing supply at higher levels, as is the Nifty. The mid-cap index is the one which is outperforming It's volatility in the expiry week. So the India VIX comes up for you up around 5%, back above that 18 mark. So we'll watch out for whether the market sustains at higher levels or not. But today's high on the Nifty as well as the Nifty Bank are telling. We had expected some congestion to come by on the Nifty upwards of 25,050. That's what the option writers were positioning for. And on the Nifty Bank as well, the previous all-time high is 56,000. So support at 55,000, which is the 20-day moving average, comes in, and supply as we move towards 56,000 comes by as well. For options that expire this week, 25,000 seems to be the fulcrum, 25,000 call and the 25,000 put. Both of them equally active for a premium of almost 200 to 250 rupees, telling you that the street is bracing itself for a broad range of 24,800 at the lower level to about 25,250 at the higher level itself. Just keep an eye on the advanced decline because, again, it is a domestic institutional investor-led market today because of the absence of FIIs. We have the advances far outnumbering the declines, and that's why the red and green lines are pretty much far apart. It will be very interesting to see where we go in the second half of trade, largely because of the increased volatility and supply at high levels.
Okay, all right, Mangalam. Thanks for that. That's on the F&O space. Sneha Sheth of Angel One now joins in to discuss the technicals of the market. Sneha, hi, welcome to the show. Well, it is turning out to be a stable day. We have the Nifty at around 24,981. We have the Bank Nifty, which is up around 140 odd points. What would your call be at these levels?
So good afternoon. Like if we look at the market, yes, it is quite stable and it is managing to take the supports around the levels, and it is holding those support. That is important. So in case of Nifty, I believe 24,800, 700 is the support zone. In case of banking index, 55,000 remains a support zone. So overall, we are seeing higher top, higher bottom structure in the key indices, and we are also seeing the put writers shifting higher. So that is the overall structure, and it looks positive for now. One can use such dips if we get any dips, and one should be using those dips to go long. Focusing on individual counters would be a apt strategy for now. So that should be the focus for now.
Let's focus on that then. What are the stocks that you have, Sneha?
So I'm looking for Tata Motors. If you see today, auto space is doing quite good, and Tata Motors, if you see, we are seeing decent writing happening in 720 put options. At the same time, we are seeing unwinding and at the money strikes of the call options. So that is a positive indication. I believe one can go long with a strict stop loss of around 717, and the target expected will be around 757. Apart from this, LTI Mindtree looks good. So this is the counter wherein we have seen a strong up move, which was followed by consolidation. And I think looking at the overall chart structure, it looks poised for a breakout. So I would recommend buying at current levels with a strict stop loss of around 5,040, and the upside target would be around 5,250.
Okay, all right, Sneha, we're going to leave it on that note. Thanks very much for joining in and taking us through all of those strategies. Well, that is the technicals of the market. We need to take a short break, but up next we'll be talking to Ramesh Kancharla, who's the management of Rainbow Children Medicare, on their Q4 performance. Stay tuned. Welcome back. Well, let's get talking to one particular company. Rainbow Children's Medicare is the next management that we have on the show. It reported a decent set. The margins came in healthy. Average revenue per occupied bed was up around 7%. We have Ramesh Kancharla, who's the chairman and the managing director at the hospital, joining in to discuss the performance this time. Thanks, sir, for joining in. If you could just start by telling us what took place in the occupancy this quarter. There was a dip to around 46.5%. versus over 53% last quarter.
That's right. There is a slight dip in the occupancy because of, so we've seen unusually kind of the quiet season, especially in the pediatric outpatients and the pediatric admissions and related pediatric intensive care admissions. That was actually brought down the kind of overall occupancy and to an extent some revenue as well.
So what can you guide for the entire year when it comes to occupancy and revenue per bed? And how does that move your margins?
I think if we go back and see that Rainbow has been always a 3 years CAGR or 5 years CAGR, we've been growing at 16%. I think that now we have added a lot of beds in the last couple of years' time, and we're going to have some more beds coming in, about 250 beds this year. So I would expect a late teens to 20% of growth for the current year. The macro seems to be fine. The monsoon is around, and also we have boarded quite a few doctors, and it all looks good.
You're expecting 20% growth on the top line this year?
Yeah, late teens to 20%. Yeah.
Okay. Are you already seeing a recovery in terms of your occupancies, for Q1?
Yeah, generally the Q1 also goes slower, but we start seeing uptrend.
Okay, you're seeing a bit of an uptrend. And what about the average revenue per occupied bed?
See, the RPOPs were kind of the last quarter was about 58,000, I think. And so what we've been trying to guide actually is an RPOP is very dependent on the ALOS. So we've been talking about ARPP, average revenue per occupied bed, per patient. So that's been steadily growing. So last year's complete year's ARPP is about 108,000, which is about 5.6 growth. So being a medical business, the RPOP is always a kind of varies with the average length of stay. Being a medical hospital is a difficult kind of a RPOP guidance. Maybe ARPP is probably a more accurate guidance. We've been talking.
So what is it? What is it on that? Average revenue per patient?
108,000. We have grown about 5.6% last year. Last couple of years also have been around 6%.
Right. What about your margins? You had said earlier that you would be expecting 25 to 27% pre-Ind AS margins. If you could, reiterate that for us. And at the same time, Rajamundry, you said that was delayed to the first quarter of FY26. Has that been further delayed, or is this on track?
No, it's on track now. So we'll be kind of opening up in the next, 30 days time, Rajamundry. And also the 2 spokes in Bangalore is going to come by the end of the second quarter. So overall, we'll have about 250 coming into the operations this year.
And margins, 25 to 27%? You hold on to that?
Yes. Like last time we discussed a year ago that, what are the bed addition coming in? Still, we maintain about north of 25% of the EBITDA. So probably whenever there's a new beds coming in, probably there may be a margin pressure about 1%. That's what actually we have seen last year, about 0.9% of the margin pressure on the EBITDA.
Okay. I just had a couple of questions. Let's start with the international business, because you get a lot of business from Somalia and other regions, but you've seen a lot of disruption there. In fact, what did you close the year with in terms of the international business? How much did it decline compared to FY24, and what are you guiding for?
We're down almost by kind of 11 crores from last year, and we were actually the budgets we were almost we were able to do only 50% of the budget of international business. So it's looking a bit better now, positive. Still, there are macros of the Bangladesh, Somalia, and Oman. Some of the challenges are there. So we are working on the new geographies, other countries. Hopefully, we do much better this year.
Okay. The other thing which I wanted to touch upon is your IVF clinics. You've got around 12 operating currently, and you've said that you've seen good traction in it previously. So what was the revenue generated from the IVF clinics this quarter, and what are you estimating in it?
There's still a low base, but we've grown about 70% of IVF. I think in a year we clocked about 40 crores of IVF business. So it's a very recent business. The IVF clinics, which we have not done outside the hospitals, they're all within our existing hospitals. So it's a very organic business, which we are trying to focus it based on our reputation and also doctors. And it's like model is a full-time doctors driving the IVF business based on the brand and credibility and reputation.
So, 40 crores is what your annual revenue this year has been. We're just trying to figure out on a low base how much higher can it grow. And alongside IVF, you also have Butterfly Essentials, which is basically mom and child care, which you have also opened in 15 hospitals, right? So what's the revenue of that business this quarter? Together, IVF and, this Butterfly Essentials, what's the scale that you're expecting here?
I think the IVF is clinical business. The Butterfly Essentials is more of retail. And the I'm not really, I don't remember how much is exactly the butterfly essentials clocked, about an average a crore rupees per month. That's what he's been doing it. We just recently kind of going on online as well. So it's setting up well, and they're all in the store. The stores are within the hospitals only, and we are trying to take some new initiatives and also product ranges and those things. So being a hospital, we're trying to be a little cautious about the people's expectations and brand, and also that kind of deliverables to the patients. So we are optimistic about the butterfly essentials growth of it as we move forward, both on online and offline.
Okay. You also have a hefty amount of cash on books. What's the utilization plan?
So we have a large projects coming up in Gurgaon, which is about almost 450 crores of capex is going to go for the Gurgaon. And also that we have still the current year projects, and also the Coimbatore is another one which is in pipeline. So we have some acquisitions working on it. So probably kind of utilize some of the cash for that.
And what about the acquisition that you were eyeing in the western part of the country, and how long before some of your other geographies break even? Just trying to understand the operational performance here.
And I think the acquisitions kind of work. We are working on that. I think probably kind of a bit early to talk about it. So we will come back to you soon on that.
And what about the break even of all your newer properties?
So the last year we opened about 3 new hospitals in Bangalore as well as Hyderabad and Chennai. So Hyderabad is actually it always breaks even the first year itself. Bangalore is close to it, and Chennai is kind of will take another 6-8 months time to break even. So I think by end of the year, the current financial year, we should be able to kind of even it or have a little positive EBITDA.
Okay, all right. We're going to leave it on that note. Thanks very much for joining in and speaking with us. So that is Rainbow Medicare. Stock is up around 0.2%. They are seeing some challenges when it comes to the international business, which has dipped around 11 crores as compared to the previous year. But separately, they are still guiding for around 20% in terms of margins, and an increase in our ARPOBs as well. Or average revenue per patient. We'll take a short break. On the other side, the spotlight is on PSU banks and how they perform in Q4 FY25. That coming up next. Stay tuned.
Welcome back. A couple of consumer discretionary names doing extremely well. So we have Trent, which has moved to the high point of trade. FMCG names as well. We have Tata Consumer, Britannia, as well as ITC, all of them moving higher. Perhaps the underlying assumption here is that if monsoons have arrived early, and as the Met had predicted, if it's normal monsoon, that bodes well for rural consumption, which was anyway on a gradual recovery path. And urban recovery is what the street is eyeing by the end of the second quarter, or in the second half of this year, largely because of all the measures taken by the government with regards to reduction of taxes, etc. But enough about the consumer space. Let's put spotlight on the financial sector, and in our offering, Fin Street, Abhishek Kothari highlights the performance of PSU and private banks in the fourth quarter.
In Q4 FY25, PSU banks have reported their highest ever quarterly profits. The gap to private bank is now the highest ever at more than 6,600 crore rupees. This is largely due to better top-line growth than private banks on a sequential basis that they have seen. So the net interest income growth for PSU banks was around 2.2% YOY and about 1% sequentially, while that for private counterparts was about 4.5% on a YOY basis and just 0.1% on a sequential basis. Other income has also helped PSU banks on their operating profit growth this time around. So PSU banks have seen robust other income growth on a sequential basis, which actually helped their operating profit growth as well. They saw an operating profit growth of more than 13% YOY and about 16.3% on a quarter-on-quarter basis. This compares to a 5% decline in operating profits on a YOY basis for private counterparts and about 1.9% sequential decline for private banks on their operating profits front. Now, IndusInd Bank is the only lender to report operational net loss in Q4 FY25. Profit after tax growth for PSU banks was stronger than that of private counterparts. Profit after tax growth for PSU banks was around 13.5% YOY and about 8.7% on a sequential basis, while private banks saw their PAT decline by 6.7% YOY and about 1.5% sequentially. Now, three private lenders, IndusInd Bank, ISAF SFB and Suryodaya Small Finance Bank actually reported a net loss in Q4 FY25. Slippages increased for the sector marginally in Q4 FY25. For the sector, slippages increased by less than 12% on a quarter-on-quarter basis, but this was led by PSU banks wherein the slippages increased more than 36% on a sequential basis, while that for private banks actually declined more than 1% on a quarter-on-quarter basis. So, annual slippage ratio for PSU banks continued to remain below 1% level. Annualized slippage ratio of private banks was around 1.9% when compared to 1.96% in the previous quarter. Asset quality gross NP ratio of PSU banks has declined to 2.6% versus 3.5% on a year-on-year basis. So, gross NP ratio of private banks was around 1.83%, which is flat on a YY basis. Net NP ratio of PSU banks has fallen below that of private banks for the first time ever. So, PSU banks' net NP ratio is at 0.5% when compared to 0.52% for private banks. IIFL CAP has released their note wherein they have shared their views. They say that following calendar year to date outperformance and earnings degrowth in FY26, they expect the sector to take a near-term breather. However, as the deposit cost catches up with a lag, they expect high teens EPS growth in FY27 for the banking sector. While banks' loan growth is sluggish, overall credit growth is still healthy around 13% YOY. Repo rate cuts to drive further net interest margin contraction in FY26. So, the expectation is that 100 basis point of cumulative repo cut that is seen in this cycle will result in 20 basis point of net interest margin compression until 3Q of FY26 and a rebound thereafter in the net interest margin of players. So, they expect higher net interest margin contraction for large private banks, followed by PSU banks, followed by mid-sized banks. The microfinance concerns have shifted from asset quality to growth. So, on the MFI, they expect FY26 growth to disappoint. They expect earnings degrowth in FY26 followed by a strong rebound in FY27 for the banking sector. DIIs have been raising their stakes, especially in private banks, but FIs have been trimming their overweight position in the banking sector.
Okay, all right, Abhishek, thanks very much for that. So that's on the entire PSU banking space. We'll take a short break. On the other side, Manisha Gupta will join in. She has with her the president of the Overseas Agro Traders Association of Myanmar. Stay tuned.
Welcome back. Joining us on the show now is Shyam Narsaria. He's president of Overseas Agro Traders Association at Myanmar. Mr. Narsaria, hi, thank you so much for joining in. First of all, your sense on the global pulses availability. We do understand that not just Myanmar, but whether it's about Canada, Argentina, Brazil, many of these producing countries are looking at a higher production.
Good afternoon, Manisha. Thank you for inviting me. And this year's global outlook, as you all are aware, that the supply is on a higher side and demand is not that much because the Indian production been very good. As we all know, the Indian consumption for pulses is around 25 million tons per annum, and Indian production is somewhere around 18 million. But you rightly said that this year in the overseas market, like in Canada, Russia, even Brazil and Argentina coming up with a good numbers, and even Australia, which supported so much with the desi chickpeas, chana, almost 1.5 million tons of chana being imported this year. So the supply side is like a surplus, say 4 to 5%, I would say. So this year the scenario is entirely different if you compare to the last year. So the supply is
Sure. Mr. Narsaria, last year India imported record numbers of pulses. You do not see those numbers continuing in this year, do you?
I think India, this year also the numbers which come to me somewhere between 6.5 to 7 million tons because this year yellow peas import is very high, almost 2.4 million tons of yellow peas being imported. And then lentils, around 1.2 million tons of lentils will be imported. And then chana, around 1.5 million, which I already mentioned, 1.5 million tons of chana. Apart from this, the pigeon peas, again, over 1 million tons. Then black mapte, which is again of Myanmar origin, it will be imported around 800,000 tons, somewhere around 800,000 tons. So this year also the numbers will be very good, somewhere between 6.5 million to 7 million, which is a record. Again, it's going to be a record, but the prices are on a lower side. So I feel the consumption will also be higher this year and the imports will also be higher. But there is, at present, it doesn't seem that there will be any deficit or gap, demand supply, big gap. Whatever demand in India, the supplier means like countries like Australia, Canada, Russia is always available for supply.
Mr. Nasaria, we've all been privy to that letter that IPGA has written to you. This is to get correction in sense of higher destination shipping charges that Myanmar puts right now, and of course problems around that bill of lading as well. How have you responded to those queries?
Actually, we received the same letter, similar letter from the Tamil Nadu Association almost 3 weeks back. And same 20th of May, we received from IPGA. And these are like very sensitive issues, like the extra shipping charges. As we all are aware that the shipping line incurring heavy losses because of the tariff war between China and US. So because of this, there are so many last moment cancellations from China-bound cargo to US and like North America. So because of this, all the shipping lines are suffering, and so many reduction in the freight is seen over the last 1 or 2 months. So I think we call a meeting with all the shipping line on immediate basis, and most of them responded that they are not doing and they are not implementing any extra charges. But we understand there are some agents or like the brokers or the freight forwarders, they are making unreasonable invoices and asking the importers to pay higher charges. And they also like threatening that if you don't pay these charges, and they will not release the delivery order. And that may further result to like detention, which will be very high. So we have tried our best, and still we are following all the shipping lines, and we are trying to resolve this issue as soon as possible.
All right, that doesn't sound so good. But it's good to know that this has come into light and you are looking at, I mean, everybody's working towards it. Yet and again, a question about India now. As you said, the imports are going to be better. The initial sowing numbers seem good. The monsoon seems quite good this year as well. What does India import in sense of pulses right now? And do you see that dependency going down at all? Or do you think the way the origin countries are now producing pulses, India and these countries, the relationship is only going to get better going forward?
There was one report from Niti Aayog in February 2024, which says that by 2030-31, the Indian pulses consumption will be around 35 million tons. And the same report says the Indian pulses production will be around 31 million tons. So even the Niti Aayog is counting a 4 million ton shortage. But as we all know, the pulses depend a lot on weather, natural calamities, and the fluctuation in the pulses price is it's very common, very normal. It is based on demand and supply, and it is the essence of commodity trade. So what I feel, dependency, like Indian government always been claiming of self-sufficiency, but I feel it will be happy. I will be happier if India attains self-sufficiency. But I feel our so many countries, like last 2 years, Indian government and so many people visited different countries to Brazil, Argentina, Africa, and even Australia, and boosted the pulses export as the numbers were demand and supply gap was very big. And because of that, the supply, the production in overseas countries, like in Australia, for example, the chana production has gone up too much, and that supported India. This year, the chana production in India is 8 million tons, whereas the consumption is 10 million tons. So
Right.
2 million gap can shoot up the price, but actually Australia help and around to control the price and food inflation. Again, in the coming to Myanmar side, yes, we see a big demand supply gap in the pigeon peas and the black mape last year, and Myanmar really worked hard. The farmers, the association, the government worked hard and boosted the production. Still, we are meeting like the ministries and Department of Trade. They always say we have to boost the production, we have to boost the supply. So Myanmar is also working really hard in the production, and as a result, this year the black mape production is record high to almost close to 1 million ton, 900,000 to 1 million ton. And like as we can see, the Indian black mape production is around 2 million tons and the consumption is around 2.7 to 2.8 million ton. So the crop stock availability in Myanmar say 1 million and Brazil say 100 to 150,000 will definitely work. It definitely worked and reduced the demand supply gap, and the price is at control. If you compare last year, the same time, say May 24, 25, and this year, the black market price has come down by almost 23%. But for pigeon peas, the price has come down by 43% compared to the price last year in the same period. So we have seen the government initiatives are working, and self-sufficiency is it's nice to talk, but I don't think because of the increased consumption, increased production in India, it will meet the requirements of the consumers. As per the data, around 2.44% growth of pulses consumption is seen in India, and it is predicted. And also, like a lot of people are turning to vegetarian, and the pulses are the best
Yes,
source
we
of
are.
protein and nutrition in India.
All right.
So I
We do
don't
understand,
think
as you put that number
the
out, that
self-sufficiency will be achieved.
we get that number that you said, that 2.4% of our demand growth is what we are seeing in pulses. And I very well take your point where you say that the global pulses availability is higher, demand not so much, and we could be looking at a surplus of 4 to 5%. I mean, that's the headline that I'm taking away from this conversation. Thank you, Mr. Nasaria, as always, for joining in and throwing light at all things important when it comes to Indian agriculture. And of course, pulses therein as a hero there. But with that, that's all the time that we have on the show. With that, it's a wrap on Halftime Report. Business Lunch will take all the action forward.